What's up, investors? It's the Russian dude, and the attractiveness of relatively one of the safest quote-unquote investments that you can make, particularly what I'm talking about the US 10-year treasuries. Well, the attractiveness of investments in these particular fixed income securities, it increased dramatically in just approximately 1 or 2 months. To be specific, right here on your screens you can see the graph which shows the yield of 10-year treasuries of the US government. And basically since approximately the beginning of October until the moment of recording this video, its yield increased from 3.8 to approximately 4.4%. And obviously one of the main reasons for this, even though it might sound a little bit counterproductive, or maybe not even that obvious if you think about it, but at least this is the conclusion that I made inside my own head, is the decrease by the Federal Reserve of the interest rates. Whenever the Feds, they do decrease the interest rates, or so-called Fed pivot, when they start from increasing the rates or keeping them the same to start decreasing them, once again this is the Fed pivot, well, this main responsibility of this activity is to boost the economic activity. Once again people start spending more money, mortgages become more affordable, car payments become less impactful on people's budgets. Basically the economic activity starts to be higher once again, but unfortunately this also tends to increase the inflation. And because of the increased activity, people also start to have more faith back on the investing on the stock market, and not just regular securities but also fixed income assets, such as, for example, corporate bonds and also US government bonds, such as, once again in our case, 10-year treasuries. People simply might have just some extra money to spare to invest on the stock market or on the bond market, and obviously you don't just solely invest in the securities. I mean, regular retail investors, we might just have, I don't know, a portfolio of 10-15 companies. Every single one of them will be an individual share of any particular company, which is obviously not the ideal scenario, but well, that's what we do. Some people might buy ETFs, REITs, mutual funds, and so on. Much better in my opinion. But the best case scenario is when you diversify your portfolio, when you try to mitigate the risks by also having fixed income assets, such as, once again, treasuries. For this reason, once again, I also assume that even though the rates do decrease, people, as a result, as 2-3 steps in this entire process, they also end up potentially buying more treasuries or other government or non-government related bonds. But then, if you think about it even further, the reason why the yield is decreasing, it is because the price of the treasuries decreases. And this is when I would say this is my second opinion, which I think should prevail in this video. I just want to give you my two sides of the same coin. So the long story short, whenever the price of a treasury decreases, it automatically boosts its yield. And the opposite is true. Whenever the price of the treasury increases, the yield decreases. So this could be another and most likely reason why the yields increase. Potentially, personally, I would give the probability of this particular second case to be the correct one. I would say 80 to 90% is, once again, yes, even though there is an increase, some people do buy treasuries and government bonds into their portfolios to diversify the risks. As a whole, as a general, the investing community, the market participants, they become a little bit less risk aware. They become more risky, basically, because in this environment, when the interest rates are not that high, people once again tend to be a little bit more risky on the stock market. That is why majority of people start actually not buying but selling treasuries or government or corporate bonds and invest more in the regular securities like stocks and shares of individual companies, ETFs, mutual funds, REITs, and so on. And because of selling treasuries, because there is an increased pressure on selling side, well, once again, on the opposite side, in order to keep the balance, this increases the yield, making them a little bit more attractive so that more people start buying them. And this is the very small, very tight, very fragile balance that the governments, that the economy in general provides us, guys, the market participants. It is now for us to decide how risky we are, how much money we're willing to lose, or if we're not risky at all and if we want just to keep everything in government bonds. Because yes, once again, coming back to the beginning of this video, the yields of 10-year treasuries became relatively attractive. 4.4% yield on 10-year treasuries, which is considered to be one of the safest investments indeed, this is a very interesting investment at this point, at least at the moment of recording this video. And as always, guys, thank you so much for watching. Please like this video, subscribe to my channel. It was interesting, informative for both, and see you tomorrow.